It's about that time of day again. Back in the action once again. Hope you guys had a great day out there. Time to get back to work, though. Time to get ready for tomorrow. It's Thursday evening. It's August the 22nd, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, in case you're here for the first time, again, my name is Joseph. My friends call me JJ. And I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight's a little bit different. I have a very important job tonight. Tonight, my job is to help you guys find the best levels of support and resistance, the best entries and exit points for tomorrow, and most importantly, how to identify some losses to avoid, some traps to avoid for that Friday's trading session. And we got a lot to cover here tonight on tonight's video newsletter. We're going to grab the charts here in a moment. We got oil, S&P, Nasdaq, gold, and euro. I'm going to start off with the oil futures tonight because you probably saw that big run lower on oil. We finished off the day today in a really tight, narrow range, but there's one really big clue that really tells me where the most important levels of support and resistance will be tomorrow. Let's grab that oil chart here, dive into that black gold here, that Texas T, and let's put this plan together here for Friday morning. Now, I think it's pretty obvious here right now. You can see these bears have control right now on oil. Big strong move down here, right? And of course, it looks like they got this little tiny trading range, right, that finished up the day here. So we definitely have a bearish market right now into this kind of narrow trading range. I want to be a seller on this, obviously. I want to sell up at a level of resistance, and I've got this, right? I've got these lows marked up, these highs marked up, and I can definitely see here, right, some selling opportunities up off of that high of that channel. So I'm looking to be a short seller here right now on crude oil. I'm also more than willing to be a buyer down here as well, right? But of course, because this is a bear market, it'll be a little bit different pattern to be a buyer off of that low. So tonight we'll talk about how I'm looking to sell off this high, right? I got a couple patterns I'm watching for to sell off that high. We'll also talk about some slightly different variations of those patterns to buy off of that low. But I mentioned this one very, very important clue on this chart, and that is that really strong move here. In tonight's video, we're going to talk a lot about these strong spikes, right? These strong momentum pushes. You'll notice here we saw a strong move down, and anytime we see a strong move, in one direction, we usually see a second leg. We have that strong move higher here right now. We're probably going to see some buyers here trying to send this thing higher, and that's exactly what I'm hoping for, so I can sell off the high of that channel. We're going to break this down into a lot smaller bite-sized pieces for you guys. We'll talk about the specific entry patterns I'm looking for here in tonight's video. How about some S&P here? S&P, as you can see here, is very much range-bound. It was quite the wild ride, as you guys probably saw today. We finished up yesterday's trading session, right, with a trading range, as you may recall. And of course, boy, the pre-market and the overnight was very, very rocky. Found a beautiful 1, 2, 3 reversal right off of that high. And then sure enough, it comes right back up and finishes the day inside, right, of that trading range. So quite a lot of movement here right now, just to finish up pretty much right back where the day ended yesterday. That definitely tells me I can draw some trend lines coming up, some trend lines coming down. This is a range-bound market. I want to buy low, I want to sell high, I want to buy low and sell high, right? Keep selling off those highs, keep buying off those lows. Try to avoid the middle of that trading range. So of course, tonight we'll talk about how to buy low, how I want to sell high. But again, there's one of those clues here. A big, strong move down again. Another strong spike, right? That spike, again, anytime we see those strong moves, we always know the odds are pretty good we're going to get a retest of that low. So that's a really big, important clue here. That tells me let's wait for that shot lower and see if these sellers can fail and buy it right back up. I'm definitely looking to buy down in that battle zone around that 29.11 area. And then, hey, who knows? Maybe the bears can get their act together this time and get back down to that gap fill. That gap fill from last weekend, right? It's still open here. So we'll talk about what I need to see to feel confident to trade down to that gap fill. We're going to cover all those details tonight on this video. Over on the Nasdaq tonight, Nasdaq is probably going to be the most difficult out of all of the markets, and you can probably see why. We are definitely bearish overall. You can definitely see some lower highs, some lower lows. We're certainly bearish, and of course, look at this bad boy, this big move down. That big move down probably going to be one of the biggest impacts for tomorrow's trading session, because anytime we see a strong move like this, we always know there's going to be a bullseye right down at those lows. But it's not as easy as just sell it, because as you can see here, the market made a pretty hefty rebound, right? With that 1, 2, 3 reversal, a beautiful example there of a nested 2-try failure, which we talked a lot in detail in last night's newsletter. And they finished off the session right inside that trading range. That's a bull market right now into a range here now. That's not good. That's not going to make it easy for sellers to get that retest of that low. In fact, I'm anticipating off of the low of this channel, I'm anticipating we might see some great opportunities here as those sellers try to fulfill their mission, right? Try to figure out how they're going to get back down to retest that low. I'll bet we get a couple setups here to buy off of that low. We're obviously finishing the day in a range here. I want to buy off that low. I want to sell off of that high. And we'll talk about some patterns that I'm looking forward to do that here on Friday morning. Over in the gold now, the yellow metal here tonight, right? That gold futures, the GC contract, we are definitely officially bearish right now here on the gold. Last couple days, we really haven't been able to get the market finishing a retest. You'll notice here, we have yet to retest any of those highs, right? It just hasn't been easy for the bulls finishing the job. Now the buyers have had no problem buying low, and I'm anticipating we're going to probably see more of that tomorrow as well. I mean, let's not forget, if you were to look at this on a longer term time frame, very bullish in the long term. So we definitely want to focus on buying as low as we can here right now on gold, and I'm definitely going to break down probably 3, maybe 4 different patterns on gold to buy, right, as we go lower. As you can see here too, gold, just like the others, very strong move down there. There's a big old bullseye down around that 1502, but along with the others, we also have that trading range right in the middle, and that range is going to make things more difficult, because what does a range tell me? A range tells me to buy low. It tells me to sell high. So as the market goes higher, I am absolutely trying to sell off of that high. That goes right along with this overall bearishness, at least over the past couple days. If we go lower, obviously I do want to be a buyer, but I've got to be a little bit more conservative is the word. A little more patient to buy off of that low. As you remember, we got to be a buyer on this. We have to go against that direction. So being a buyer on this, I'm going to look for a slightly different pattern to buy low on this. We'll also talk about breakouts here tonight on gold. What if those buyers do finally get a chance to break out? When can we trust a breakout? How do we trust the breakout? We'll talk more about those details tonight on this video. And then, of course, wrapping up tonight here on the euro, you might want to get the kids out of the room for this one. This is an ugly one. This is one I wouldn't want them to have nightmares over it. It's been a pretty ugly market here the last couple days. You can definitely tell it is late August right now. I don't think anybody is in the office over there at the euro right now, right? I think everyone's on vacation right now for this euro. Bottom line is, we know we are very much bearish overall. You can see this channel. It's an ugly channel. It's working, but it's ugly, right? So we're trying to stay focused on selling off of the high of that channel. And of course, also too, I have no problem being a buyer off of this low. I just have to make sure though that I get the right setup. So I want to be a buyer off the low. I want to be a seller off the high. I've got this trading range with a bear bias. That means to be a buyer, I need to use a slightly different pattern here tomorrow than being a seller, right? And as you can see here, once again, look at that euro, another strong shot, right? That strong shot means we're probably going to see that retest, and then we can look for that run going back up into that trading range. Not to worry, I'm going to cover all these specific entry setups that we'll use here for tomorrow's trading session. But before we jump in though, I always want to make sure to remind you to join our mailing list. You may not be aware of this, but every evening, just before I send out out or just before I publish this video on our YouTube channel, I send out an email to everyone on our mailing list. And I want to make sure you get that email. That way you get the first crack at this newsletter video when it goes live every evening, Monday through Thursday. And joining the mailing list is super easy. All I need is your first name, a real email address, and then hit that subscribe now button. And don't forget, when you hit that subscribe now button, your job is not over yet. You still need to go in, check your email, because I'm going to send you a welcome email and a verification link. I need you to click that verification link. That way you'll verify your inbox, and inside that welcome email is a bunch of free resources for you so you can get the most out of working together with me every evening on this newsletter. So don't delay, pause the video. All I need is your name, your email address, hit that subscribe button, and then check your email for that welcome email. And don't forget, sometimes those emails, they get stuck in your spam filter. So check there if you don't see it in your inbox. And then real quick, guys, down in the comments section, I have a question for you tonight. If you could go back and turn back time right now and do your trading career over again, what would you do differently the second time around? Or if you're like me, maybe the third or fourth time around. I didn't have a very easy job when I first started, probably because I was doing it on my own for the most part. But I have a question for you though. In the comment section below, tell me, if you could have a mulligan, if you could do a redo, if you could get a reset or a restart, if you could go back to that rookie version of you again, how would you do things differently? What would you do things differently? How would you look at the markets differently? Or maybe you are brand new to the trading business, this great trading business, right? What's the most important thing that I can teach you on this nightly newsletter? Guys, I am always trying to make this video newsletter better. As you can tell, this newsletter has been going on for over 11 years here on YouTube. And the reason why it's lasted so long is because you guys keep giving me such great feedback, and I keep improving this video every single day, Monday through Thursday. So help me keep making this video better. Question for you, if you could turn back time, what would you do differently about your trading career? What would you ignore? What would you put more attention to? What are some of the mistakes you would do differently, right, the second time around? Or let's be honest, some of us third or fourth times around, right? My hand is raised on that as well. And as always, I appreciate you taking the time to give me that feedback in the comments section below. And then before we go forward here, if you tune in every evening on this video, hit that thumbs up button for me, because I'll tell you right now, every time you hit that thumbs up button, it helps to expose this video to other new traders who we all know are dying to learn these strategies as well. So guys, if you tune in every evening, help me out real quick, hit that thumbs up button, because you'd be amazed at how much that does to expose this video to other traders who want to learn and earn as well. So thank you so much for that comment in the comment section below. Thanks for hitting that thumbs up button. Don't forget to join that mailing list. And if you have any questions, don't be afraid to pick up the phone and call that toll-free phone number. I'm always here in the office. When I leave the office, it'll forward right to my mobile phone. So don't be afraid to call that toll-free phone number if you have any questions about charts, data, brokers to get started, or maybe you have a question about getting access to our free trading classes or joining our trade room on a free pass. Call that toll-free phone number in the upper right-hand corner. Use that live support tool. And of course, we look forward to answering all your questions here in the office here in Los Angeles. Well, that's it for now, though. Let's jump into the video tonight and let's get this party rolling here. Tomorrow is a Friday. Of course, it's not just any Friday. It is a summer Friday. Of course, a summer Friday means early in, early out. It's going to be a relatively small window of opportunity tomorrow. And tomorrow will probably be the last Friday of the summertime season. Next Friday, of course, is the Labor Day weekend, which means that window will be even smaller, right, than the window of opportunity tomorrow as well. Now, we open up our trade room every morning at 8 o'clock Eastern Time, and we typically trade all the way through to about 11:30 a.m. On a Friday morning, though, you've really got to have a good reason to be trading after 11 a.m., and on a summertime Friday, I don't want to jinx it, but really, after 1045, you're usually going to have a hard time, right? Really have a hard time being confident with price action. One of the challenges of being a new trader is you haven't experienced enough Fridays yet. And I say that because Friday mornings, psychologically, if you're way up on the week or you're way down on the week, psychologically Fridays can be difficult because if you're in a hole, right, from some losses earlier that week, it tends to be difficult to walk away at 10:45. Or on a Friday, right, if you make a bunch of money this week, it's very difficult to keep that money walking away, leaving the casino, as we say, 10:45, 11 o'clock. So be aware that little voice in your head tomorrow morning is going to be saying one more trade, I promise, one more trade, then I'm done. But remember, as we get later in the session on a Friday, especially a summertime Friday, you've got to be thinking volume will drop, professionals will leave the building, and you're left trading next to rookies. It's like driving a car at 2 o'clock in the morning. There's nothing good going to happen on the roads, right, at that time of night, right? Listen to what your mom told you when you were a child, right? Nothing good happens after midnight. Not a lot of good stuff is easy. Not a lot of reliability. We do see moves after 11 o'clock on a summertime Friday, but it's the reliability of those moves that really will be in question. Now, as always, we'll be in our trade room tomorrow morning, bright and early, and I'm going to help all you guys in the trade room tomorrow navigate through this summertime Friday. Less is more tomorrow. Less is more. We'll get in there early. We got that 10 o'clock news. I don't think Jerome Powell is going to have too big of an impact. We heard the headlines out of his speech today from Jackson Hole. So I don't think Jerome Powell tomorrow is going to be that big of an impact. But with that 10 o'clock news event tomorrow, I would imagine once the dust settles, 10:30, 10:45, that'll probably be all we get as far as reliable setups. I'm not saying we won't get some, late day rally or late day collapse. What I'm saying is, if you're looking for reliable setups, get it early, get out of there early, grab some sunblock, right, and enjoy the weather before it's over here, right, for the year of 2019. We've got a couple more weekends left here, right, of this summer, so make sure you enjoy it early in, early out tomorrow, especially, right, for new traders. And if you do want to trade after 11 o'clock, right, make sure you trade very small size, keep it simple. It's not the time to be trying to get too aggressive, right, in the afternoon on a Friday morning session. All right, so we got news tomorrow at 10 o'clock. Careful tomorrow. Small window of opportunity. And of course, there'll be no newsletter tomorrow night. Our next newsletter will be on Monday evening. Let's jump into our video tonight, though, with our charts now. Jumping into our charts, we got crude, S&P, Nasdaq, gold, and euro. I'm going to start off first here with the oil market. Oil is pretty obvious, like I said earlier, very clearly we are bearish overall, lower lows, lower highs. The buyers did get their 1, 2, and we did get a very mild reversal off of that low. We talked about this last night, right, on the newsletter, but it did not complete its full rotation, which we were hoping for those bulls. The bears grabbed it and ran it back lower. Now that lower low, I'm lining it up and creating that channel. We know we have a bear market. Bear market is overall a trending environment, which is I'm trying to use channels and measured moves. I've got my eye on the top of that channel for a key selling area. At the same time, though, you can also see the day ended up inside of a range. Now, range-bound markets are very, very specific. They tell me to buy low. They tell me to sell high. I can buy low. I can sell high. The only difference here is we know we have a bear bias right now. The market is overall bearish right now, which means being a buyer right now is going to be a little bit different than being a seller off of those highs. So we know we have, for the most part, we've got two main components here. One is the overall trend is bearish, and two is this little range we have here right in the middle, right smack in the middle. And I should also say too, I guess there's three components here because as I mentioned in the introduction, we have that big spike going higher. Anytime we see a spike in one direction, we always know there's kind of a bullseye, right, back up to retest that high. And sometimes they'll turn into full reversals and you'll get a measured move out of it. So right now, we know we want to be a seller. I want to be a seller here on crude oil. I have this big push, right? This big bull shot going higher. So anytime I see a big strong push like that, I do expect to see a second try here. And that's exactly what I'm hoping for. I'm hoping we get this market to make a run higher. I'm hoping we get that moving average coming over. I want to see the buyers try to buy that pullback. It'll look a lot like this one back here, not as dramatic, obviously, as that previous one, right? But the pattern itself, we go up, the buyers try to buy, and then what I want to do is I want to sell, again, off the top of that channel, and I should be able to get a nice short there, sell that failure, sell that pullback, and finish off that move back down into the range, and hopefully back down to retest that low. So quick recap here, we've got our bullishness here in the short term. Overall, we're bearish though, so I want to be a seller overall. I expect those bulls are going to want to retest that high, and hopefully they do, because when they do, that will bring that moving average over. That's exactly what we want, because now, again, we're at the top of that channel now. I want to be a seller, and one of the easiest ways to sell when a market pops up to the high of a bear channel is to wait for those buyers now. These are counter trend buyers at this point. Those buyers to buy off that moving average. That tells us now right where the pain point is, right? It tells us right where those stops are sitting now, right? And we can sell right into those stop losses. Now, oftentimes, there's a pullback pattern that sets up just afterwards, okay? That pullback pattern pulls back to that moving average, and a lot of times it happens relatively fast, so you can really get a quick first target off the failure and then grab the pullback for the run back down as we go. Again, I call this a failure pattern into a pullback pattern, and of course, targets now are back down to retest that major low. But what if we don't get that? What if we sit here for a while? If we sit inside this trading range, really it's no harm, no foul at that point. It's not really much of any concern. If we sit here and go sideways, not a lot changes. We still have the overall bearishness. If we sit, then I would say the strength of that previous bull move will definitely be diminished a little bit, but it really doesn't change the plan very much. If we sit here inside that trading range, I'm going to focus on selling high and focus on buying low. With that bear bias, I'll look for price to take a jump higher, get that moving average to pop up. A lot of people love to trade breakout pullbacks. Breakout pullbacks, we talked about this last night on the newsletter. Breakout pullbacks are a very common rookie strategy, but I'll tell you right now, they don't work very well. And so anytime I see a trading range and I see a market try to break out, I always know there'll be a lot of rookie traders trying to buy that pullback, and most of those breakout pullback patterns are going to fail, and I'm going to look to sell, literally sell, right into where I anticipate those buyers' stop losses will be. This is one of the big reasons why I love being a teacher, because I made all of these mistakes. When I was a rookie, I was the guy trying to trade that breakout pullback. Right? And I tried numerous different indicators, you know what I mean, right? You try to use momentum divergence, you try to use MACD, you try to read tape, volume profile, you use everything to filter. How do I know which breakout pullback I can trust, when in all reality 6 months go by and you realize none of these are very reliable, because you can't tell the winners from the losers before you take them. So I never trust those breakout pullback patterns. I sell them above the high of that range, back down into that trading range. But what if the market tries to go lower though? This is where things are going to get a little bit different, because remember, we're overall bearish. Now I do have a measured move here, 1, 2, 3 legs. We do have a measured move coming off this high. So that's where I get that measured move there at 62. You'll notice I've got these measured moves, right? 1, 2, 3. It's a trending environment overall, so trends always tell me to use those measured moves, as you guys have probably learned before in this newsletter. So we know we have that buy zone down here, right? The measured move with that prior low. Again, if we do sit here for a bit, right, inside that trading range, we know we're bearish. So if we do make a run going lower, get that measured move now, what's the best way to buy in a bear market? Well, remember, first of all, what's the most important thing? is give the sellers in this case the benefit of the doubt. So if we get a strong run lower here, and again, we are bearish overall, I'm going to anticipate those sellers will probably try a couple times before they give up and let this thing run higher. And to do that, I'm going to let these bears try once, try twice before I go looking to be a buyer now back up into that trading range. So do you see the difference there? If we have a range here in the middle right now, I can go higher and I can sell into a buyer failure pattern pretty aggressively off those highs. Okay, but if we go lower and I want to be a buyer as we go lower, because we're overall bearish, I have to wait a little more patiently, one try, two try, and then I can make that move back up into that trading range. We call that a nested variation of the failure setup. Now, what's a breakout look like? How would we start to, for example, if it runs higher here, at what point do we start calling this a breakout or a bull market? Range breakouts and trend reversals require the same thing, what I call a 1, 2, 3 breakout, or in this case, a 1, 2, 3 reversal as well. And that would be a 1, strong move up, 2 is a pullback to the moving average, 3 will be a strong move off the moving average, and then pay attention, guys, we're going to mark up that low, mark up that high, mark up the low now of that new channel, and that's going to create what I call the sweet spot, and that is the low of that channel combined with that first leg high. Okay, that's what I call a 1, 2, 3 reversal, or in this case, because of that range, a 1, 2, 3 breakout as well into a hidden channel pullback. The same thing will go to the downside. If we have for example, a strong move down, again, I am going to look for that nested failure to buy back up. But if we see a strong move down and they could hold that pullback here and run, again, 1, 2, 3, the key is getting that strong move going lower, mark up that low, mark up that low, find that channel high, you got it, and now we're looking to sell up off of that channel high. So that's the plan, right? I want to buy low, I want to sell high and fade those breakouts, but I'm also open-minded to that 1, 2, 3 reversal or 1, 2, 3 breakout to trade the continuation in a new direction. So boy, we've covered a lot here so far. We've talked about failure patterns, nested failure patterns, 1, 2, 3 breakouts. Boy, I have a lot more I want to share with you, but as you can see, I'm already about a half an hour into this video right now. So here's what I'll do. I'm going to move over to the S&P right now, but I want to give you guys access to our free trading course here at School of Trade. In the upper right-hand corner, you'll see a link that will pop up there right now, and that link will take you right to our website at schooloftrade.com, where you can register as a brand new member of our free trading course. Now, don't let the name free, don't let that name free confuse you, because I give away more value in that free course, more knowledge in that free course than most people charge thousands of dollars for. Everybody loves that course. You'll learn all my favorite entry patterns. You'll learn my 3-step trading strategy. You'll also learn, right, you'll also see hundreds of examples of how we apply these patterns to our favorite futures markets. So if you're serious about your trading career, definitely grab that link in the upper right-hand corner, and I'll see you on the inside section, right, of our members section on that free trading course. I'm also going to put a link right below the video tonight on our blog here at Sideways Markets. So if you're on the blog at Sideways Markets right now, feel free to grab that link with that big red button, and I'll see you guys inside that free trading class. In the meantime, though, let's get moving over here now to the S&P. We have a great idea of the plan for oil now. Let's grab a look now here at the Emini S&P. S&P is pretty much a range-bound market. There is definitely a bullish tone to it, right? We had that big run up into that trading range of 4. We really have been basically chopping around inside that range ever since, right? Remarkable how with all of that movement back and forth today, they wind up right back inside of that trading range again. So pretty remarkable, right? That rally back up to finish off that day. So we definitely can see here we have an overall bullishness to this market. But again, you'll notice we have that big bear move lower again And that's going to put a big bullseye right down around that 29.04 and a quarter. So we know that sellers, they're going to be trying. They're going to be trying to retest that low here. And I hope they do, because I can see a trend line coming up here. I can also see a trend line coming down here as well. This is pretty much just one big range. And so I'm anticipating that sellers will try to want to sell this sucker, right? They'll want to take this thing lower and get back down to that 29.05 area. And I'm hoping I can be a buyer off of that low, right, as they try to make that run lower. So that's the overall plan. We are bullish overall. It is definitely a more bullish than bearish market right now because of that short-term move into that trading range. So how do we trade it off the low here? Right? It's a range-bound market. I want to buy low. I want to sell high. I want to avoid the middle, right? So stay away from that middle. So if we sit in the middle here right now, you want to stay away from that middle, stay away from that range. But as we go lower here, okay, as we go lower, let's talk about this for a moment, because it is very important that we understand how momentum works here. Let's say, for example, we make a shot lower here. We get down to that trend line here, all right, down to that trend line support, right? That moving average comes over. The sellers now will try to sell off that moving average, and I'll be sitting right there to wait to buy into their failure, buy that pullback, and run back up to retest the opposite side of that channel. But what if they really run it, right? What if they really run it? What if they run all the way back down to that 29.05 area? At that point, just like we saw this big run earlier, see how the bears tried once, tried twice, and then went up? Yep, that's exactly the pattern I'm looking for if we get that strong shot lower. If it really shoots lower here, now I wait a little bit longer to get in long. I wait for the 1, I wait for the 2, because remember, you got to respect those bears. You got to give them the benefit of the doubt. They're not going to give up that easily if they get a nice strong run lower. So again, if we see a relatively modest push lower, moving average, again, moving average comes over. Bears will try to sell off that moving average. We'll be sitting there to buy into their stops, buy into that pullback, and go back up and retest the opposite side of that trading range. Or do we really shoot lower, right? Get that retest of that low. At that point, it's that 1, it's that 2, and back up in from there. One of them is a failure pattern. This one is a nested failure. The term nested failure because there's a failure inside of another failure, right? Like those Russian nested dolls. So again, we want to stay away from the middle here. I want to get long off these lows, failure into pullback, or right, that nested failure back up into that range. And again, guys, I'm just simply drawing on the screen right now, but if you want to see lots of examples of how we apply these patterns to our favorite markets, grab that free course I mentioned earlier, because I've got literally hundreds of hours of examples of how those setups look on real charts, right, with real price action. So definitely check those out inside the free trading classes. And then of course, what if the price goes higher? Well, if price goes higher, now we're trying to sell in a bull market. So if this price runs higher now, I've got to be careful, right? Because if I try to sell the high, which I do want to do, by the way, it is a range environment. I've got lower highs, I've got higher lows, I got that trading range. It is a range environment. There just is a lot of bullishness to it. So if we do run higher here, what's the best way to sell in a bull market? It's that same nested pattern, right? It's that same thing. It's the 1, it's the 2, and then back down from there. In fact, you can see an example of it right here. It's a little bit tough to see because it's not that, this is obviously a much slower time frame than you would day trade with, but we make a big run up, and look what happens. We pull back, one little big green candle right there, right? 1, there's 2, and it collapses back down. That's exactly the type of pattern. Again, this obviously is a very slow time frame. That will look a whole lot better on a faster time frame. But up, let those buyers try once, lower low, let them try twice, right? See how they make that lower low, right? They make that lower low 1 and 2, 1 and 2. You want that lower low there, up, down, up, and then back down from there, right? So you can see that pattern. And again, all we're doing is we're just giving the buyers the benefit of the doubt here. You know, we know the market's overall bullish. I want to be a seller off this high. I give the buyers the benefit of the doubt because they've got momentum on their side. It's a range. I do want to sell the high, but I have to respect those buyers and their momentum. Now, last but not least here, and again, stay away from that middle. Last but not least here, what's a breakout look like? Breakout. 1, 2, 3, breakout. Right? Strong move down. Hold that pullback. Mark that low. Mark that high. There's our sweet spot right there. And where do you think our target's going to be? Yeah, that gap, right? That weekend gap, absolutely. So that gap, I would assume if they can get through that 29.05 area, I would assume that gap fill, that 28.91 half area. Again, 1, 2, 3, mark up that low, mark up that high. And remember, again, I'm not trying to sell that first pullback. Okay, this is one of the most common mistakes we make as new traders. I'm not trying to sell that first pullback. That first pullback is most likely going to fail and go right back up into that trading range. Again, I'm looking for a failure to buy off of that low. But if those buyers can hold it, if they can hold it and give me some strength, if those sellers can hold it, if the sellers can hold it and give me some nice strength off that low, now I can mark up that low, find that channel now, and now I can sell off the top of that hidden channel. Target at that point be down to retest that gap. But again, make no mistake about it though, I'm looking for that move down. I want to see a 1, I want to see a 2, and I want to see it right back up into that trading range. As we go higher here, 1, 2, 3, again, 1, 2, 3. Now, as we go higher, don't forget, we've got all that resistance up there at 29.40, right? We saw how difficult it was for these buyers to make that happen earlier. 1, 2, 3, very strong moves up, and they couldn't hold the pullback. So it's a good example here of why I don't, just because we see a strong move up, does not guarantee we're going to get that follow through, right? Remember, again, it's a range. So it's going to be a 1, a 2, and sell it back down like we saw back here. But if they can hold it, right? If they can hold it, 1, 2, 3, if they can hold this on strength, real strong move going through, we'll probably see one more pullback that is tradable, and we'll be able to get that low of that hidden channel, right, for that next leg up. But again, I'm not trying to buy that first pullback because that first pullback usually fails on a range breakout attempt. So now we know we're buying low, we're selling high, and again, with these big strong spikes that we're seeing in the market, it's important, for example, do we have a modest pullback with a failure pullback combination, or do we see a real big move lower for the nested, right? That's a big, big important part of tomorrow's trading strategy. And again, I would highly recommend grab that free course in the upper right-hand corner to see more examples of those patterns. How about some Nasdaq? So Nasdaq, like I said in the introduction, I think the Nasdaq's probably going to be the most challenging of all of these markets tomorrow, just because there's so many wild swings on this chart. I definitely have a slight edge, right, for those bears, because you got that big strong move down. I shouldn't say that. I shouldn't say edge for the bears. The bulls have a slight edge because they're going into that range, right? That was the most recent. But those bears, they're kind of hanging out in the corner going, I see you. I'm going to try to get back down to retest that low. Anytime I see a real strong move like this, I always know there's a chance that out of nowhere you're going to see this big shot going lower. They can try to retest that low again. So the bulls definitely have obviously the short-term momentum on this. It is bullish in the short term here into a trading range. It does look like it might be starting to get into a bit of an expanding triangle. So you want to make sure you keep up with that tomorrow. If you're doing this on your own, we'll of course do this tomorrow in our trade room tomorrow morning together. But keep an eye on that expanding triangle, because that expanding triangle may come into play here tomorrow as well. So bulls definitely have that short-term momentum. It is obviously a trading range. We've got double tops. We've got double bottoms. And so with that bull bias to it, I want to be a buyer and I want to buy low. And of course, with that bullish bias to it, it really all depends on how deep this pullback is. Is it a relatively modest pullback, down to the battle zone here, right? I look for those bears to sell off the moving average. I look for those bears to fail so I can buy into their failure. and back up again. That could easily be a failure pattern into pullback combination off of that low. Or do these sellers get what they want, right? Do they get that retest, or do they get a very close call to that retest? 1, 2, that's a nested pattern. See the difference there? Again, just the S&P. If it's a modest pullback, sure, it's a failure, right? Modest pullback, it's a failure. And again, this is all coming off that moving average, right? Moving average, the bears to sell it. We know where their stops are now. We're buying into those stops, buying the pullback. And again, you'll see lots of examples of this combination set up inside that free trading course. But again, it's a failure pattern off that low because it's a range, right? Ranges tell us to buy low, sell high. Price goes lower, bears to sell the pullback. We buy into their stops, buy the pullback, and rally back higher. Or do we see a little more drama, right? Do we see this market really run lower, trying to retest that low? If that's the case, we got to respect that momentum, give those bears the benefit of the doubt, make them try once, make them try twice. Notice how I draw this, right? It's higher highs there, 1 and 2, right? It's higher highs there. It's 1, it's 2, and then up we go from there. You can see an example of that, right, from earlier in today's trading session. So that's the goal there for tomorrow, right, to get that pop going back up as the market runs down to retest that low. That's the goal there. Let them try once, let them try twice. And then obviously if they can hold the pullback, right, 1, 2, 3, if they hold that pullback, great. Gap fill coming up next. We mark up that low, mark up that low, mark up that high. That creates that sweet spot, and we're trying to sell right off that sweet spot. Again, what's our target? Gap fill. I would imagine if they can break with a 1, 2, 3 and really push through that low here, I would imagine that gap fill should be on the menu. Let's get that low marked up, that high marked up, and we're trying to sell off that high, right? That's called a hidden channel, right? It's a 1, 2, 3 breakout into a hidden channel pullback, or a hidden channel failure, or a hidden channel trap, right? You'll learn all about those patterns, by the way, in that free trading class. And then, okay, that covers the downside here. Now, what about the upside? So we have a trading range environment right now. Okay, it's bullish. Okay, so what if the market jumps? If the market jumps up, how do I sell it? You sell it using that nested, right? You don't just try to sell it, and you don't just sell into a failure, because remember, we're bullish. So if you try selling right below those stops in a bull market, a lot of buyers are waiting right there, and they'll make you pay, right? They really will. So what I want to do is I want to go up. I want to look for the buyers to try once, look for those buyers to try twice. And anytime I have this much momentum that's bullish, I always like to incorporate a little trap high off that, right? We call this a crown reversal. Remember that from last night on the newsletter for oil, right? A crown reversal. It's not required, but that would definitely be a little cherry right on top of the ice cream, right? So this will go up, right? Want to see 1, want to see 2. If I can get a trap high off that, that is just going to be a delicious, right, sell setup there. Again, it's the same idea, right? Give the buyers the benefit of the doubt. 1 try, 2 try. You're going against the trend here, for crying out loud, right? So try to sell above the high of that range, but do it carefully, right? Do it more patiently. Let the buyers try once, let them try twice, and go down from there. And again, stay away from the middle, right? Stay away from that middle. The no trade zone is there for a reason. And then how do we buy a breakout here? There are 2 types of breakout patterns I'm looking for here on the Nasdaq. One of them you've already learned, the 1, 2, 3 breakout. Mark up that high, mark up that high, mark up that low, right? And buy the low of that channel. Another breakout pattern, though, we may see, which is a strong move up, a 1 try for the bears, a 2 try for the bears, and then a trap low with a strong signal. This is, of course, what I call a 2-try breakout pattern. Now, the psychology behind this pattern is really what makes it work so well. As we see a strong break higher, the first thing that will happen is the buyers will take profit, right? The buyers will take profit, and that will pull back off of that high. Now, once those buyers take profit, sellers will start to slip their orders in just above that high. The sellers will then come in at that higher high in price, right? And they'll sell from there. Once I get that trap low, then I look for that signal. You can see something similar back here. We go up. There's one try for the bears. There's two try for the bears. That would be your trap right there, right? That would be your trap signal right there. We didn't get it, obviously, in that one. Okay, but that is identical to what you'd be looking for here tomorrow. So those are two breakout patterns as we make that, right, that run going higher. The key to this one, though, is strength. The big key to this one is you've got to have a real strong move going higher. Okay, unlike the 1, 2, 3, which can be a lazy first leg. The first leg going higher for a 1, 2, 3 breakout or a 1, 2, 3 reversal can be relatively lazy. It doesn't need to be stellar. It can pull back, and then the second, right, the second push higher, that's the one that's got to have some elbow grease on it, right? That's the one that's got to have your weight behind it. That's the one that's got to show us, okay, we're bullish. Now mark up the high, mark up the high. You got it, right? And we're trying to buy off of that low. So that's the difference there. The 2 try breakout is a rocket ship going higher. 1 try, 2 try, trap, and go. Where's my target, by the way? Target is back up to retest those highs at 77.90, which is still elusive, right? Those buyers have not been able to get that job done. That's why as we go higher here, until we see that one of those breakout patterns, I will be looking for that nested failure to sell off that high. You can see one right here, right? We go up, they try once, they try twice, and right back down again. Great example, right, of exactly the same pattern that we're looking for here tomorrow as well. All right, guys, you can see plenty of examples of these. And again, as I mentioned before, I'm just simply drawing on the chart right now. We'll plan this out for tomorrow. We'll trade it together tomorrow morning in our trade room. But don't miss out on that free trading course that I have linked up in the upper right-hand corner for you guys. All right, how about some gold here? Gold, like a lot of these markets, there's a little bit of a trend. There's a little bit of a range. And there's a strong spike, right? There's a strong spike. This one, you'll notice, this one's got a strong spike in both directions. Now, let's be honest here. On the gold is very much overall very bullish. Let me grab that 60-minute chart. We talked about this earlier on this week. I just kind of want to bring this up again because it is important that when I say bearish, I'm being very loose when I say the word bearish right now because it's very easy to see, right, that we have this big run up in the beginning of August. And of course, we're pretty much inside of a range right now. So anything that goes down here, unless of course there's some big headline that really proves that, the reason why gold's so bullish right now is everyone's thinking the recession's coming here soon. And so we'd have to have some major news that would come out that would disprove that belief. And with the news media doing what they're doing right now, I doubt that's going to happen anytime soon. So fundamentally, we are bullish. Technically, we are bullish, right? The chart says bullish. The news media says bullish, whether you agree with it or not. And so we have to assume that if it does pull back here, right, this bird's eye view tells me we're going to probably end up seeing more buyers come in. So when I say bearish, within reason, right? Within reason. And it's also one of the reasons why I'm actually looking forward to buying off that battle zone because I do think you're going to keep seeing buyers just kind of picking up these nickels and dimes, right? Every time it goes down, I think buyers will keep on kind of filling up their pockets with more of these coins here as they go lower. So again, I'm going to say bearish, right? But be aware, I'm talking about short-term momentum right now, right? Again, it's a little bit bearish, but if we go lower, you're going to have buyers come right back in and buy the heck out of this market here right now. I also have this channel. In a bear market, I'm always looking for levels of resistance to sell off of. I'm not sure how much I'm going to use that level of resistance overhead just because it's so close to that range. I'm more likely going to use that battle zone as that key level of resistance to sell it. However, the low of that channel is a great spot to be a buyer right now. So I'm not sure if I'll use that channel for a sell tomorrow, but I would imagine though the buy for tomorrow is on, right? It's definitely on off of that low. So that's kind of one main component. Another main component obviously is this trading range. This beautiful little mess of candlesticks right in the middle here, right? Up, down. Range-bound market. What does a range tell me to do? Range-bound markets tell us what? To buy low, to sell high, to avoid that middle, right? So we want to buy low, want to sell high, want to avoid that middle. And just in case you missed it earlier this week here, I use the size of that range, just in case you're curious, and you'll learn a lot more about this in the free trading course. But I use the size of that range to define the sell zone, to define the buy zone, okay? So the size of that range plays a very big factor into the size of that buy and sell zone. So those are going to be levels of support and resistance, 1, 2, 3. That'll be your measured move down. So we got a lot of good stuff here, right? Got a lot of good stuff right now on this chart right now. Lots of support levels down here. Lots of good resistance up here. Nothing good right in the middle. Nothing good right there in the middle. So definitely want to stay out of that middle. Now, the last most important thing, which I'm going to sound like a broken record here, is that strong move down. That strong move down, you know what I'm going to say. There's a big old bullseye right on that 1502 level, 1502, 1503. I would imagine this whole area right there is going to be a nice solid area of support. So we know those bears are going to probably try to make a run for it, and I'm hoping they do because we'll look to buy into their failure. But look, at the same time though, there's also a big run higher here, and that big run higher says, there's a big bullseye on that high too. So we might really be able to play this thing well tomorrow, buying low, selling high, and of course avoiding that middle. Now, what's the most important part of this? I'll tell you, I think you're going to be able to do this in both directions with pretty much some effectiveness right now. You get a little bit of bearishness, a little bit of bullishness. You know, as we go higher, the overall bears will come in to sell off the high. As we go lower, the overall bulls will come in and buy off that low. So it really all depends on the strength of the pullback. It really does. You know, we talked about this last night quite a bit, right? Let's say, for example, going lower here first. If we see a shot lower, not a big strong move lower, moving average comes over, it's going to be a simple seller failure into a pullback, going back down into that, or going back up now into that range, right? Let the sellers try to sell off that moving average, right? Buy into their stops, and then wait for it. It'll also usually come back and give you a pullback afterwards as well. A failure into pullback combination. But if we get another big push down, right? Another big push down, like we saw back here. Look what happened back here. Strong move down. What do? 1 try, 2 try. These are kind of difficult to see. You can see that red candle for 1, that big wick on the red candle for 2, and then right back up again. That's the same scenario. Strong move down, right? 1 try, 2 try, back up into that range. Again, give those bears the benefit of the doubt, right? Give those bears the benefit of the doubt when you get that big of a strong move down. So shallow pullback is a failure, right? Simple straight failure pattern, right? Failure pattern into pullback combination. Again, that moving average will come right over the bears to the sell off of it, or strong shot down. Bears try once, bears try twice. You can still obviously grab that pullback, right? That pullback will also work as well. Okay, looking to be a buyer into that failure, buyer into that pullback, as long as we're not buying inside of that trading range. As we go higher, do we just clip the wings of this channel, right? 1 try for the bulls, 2 try for the bulls, sell that failure, maybe that pullback back down into that range, right? A modest breakout. The buyers try to buy that pullback for a breakout running higher. They fail and we sell into their stops, or right, we pull back and sell that pullback. Sometimes that pullback pattern doesn't happen because it might be too close to that trading range. Remember, you want to stay out of that trading range. That's the key. You want to stay away from that range-bound market, right? Or do we see it really run, right? Does it really run? If it really runs up, nothing changes that much. We haven't held the pullback yet, but if you really run here, now it's the 1, the 2, and then back down. You get it. Or a breakout. What would a breakout be? Breakout, 1, 2, 3, breakout. You got it. Mark the high, mark the low, buy that pullback, and going up right from there. Or it's a strong move up, 1 try, 2 try, trap low, so you're not buying into that overhead level, right? That overhead level up there will be a major resistance. But again, right, it requires those 2 different patterns, right? 1, 2, 3, find that channel, buy the low of that channel, or a strong move up, 1, 2, trap, so you're not buying into that overhead level of resistance. I'm not sure I'm going to be that aggressive, though, as the market does that going lower, right? I like the idea of being a buyer as it goes higher with the right pattern, obviously, but I'm going to really want to make sure we get that 1, 2, 3, and you're going to have to really prove it to me, bears, that you want to keep going here, because again, as I mentioned before, I would imagine a lot of buyers are waiting down here to buy up off of that low. So just be aware of that. That's why I mentioned earlier, there is that lingering group of buyers there before that range there if the gold goes lower. Wrapping up here now tonight on the euro. We've covered all the markets. Last but not least here, we save the prettiest for last. It's a market only a mother could love right now. It's a beauty, isn't it? Very choppy, very range bound. But like I mentioned earlier this week, don't let this choppy price action fool you. This is obviously a very slow time frame for the euro, and we are dealing with a little bit lower volume in the month of August, just the way the summertime goes here for the euro at least. But you know what? Every time it goes up, right? The euro right now has been a range. It's been a range all week, and we have another range here again. And it may not be pretty, but every time it goes down, we're buying it back up. Every time it goes up, the sellers come selling it right back down. So it's par for the course. It's a relatively easy strategy. It may not look very nice, right? It may be ugly, but it's definitely a tradable market here right now. The most important thing right now is simply stay out of this middle. Right? Stay out of that middle. I want to buy low. It's a range. I want to sell high. There definitely is a more bearishness to this market, both fundamentally and technically, thanks to the U.S. dollar, right? That's what President Trump in the U.S. has been complaining about with the Fed, right? Why don't you cut rates more? That strong dollar that's happening right now is what's making this euro go lower. So we know the market is bearish, which means I'd like to see us go up, get these buyers to try to buy the pullback. You got it, and we can sell right into those stop losses back down again. If it's a relatively aggressive pullback, right, a relatively big one, now we just use that nested, right, the 1, the 2, and then down from there. Or do they hold it? Maybe they hold it, right? Strong move up, they hold it, and they run. Maybe tomorrow, maybe Fed Powell, right? Maybe he says, nah, we're going to cut rates a gajillion basis points. The dollar tumbles, the euro spikes, right? It could happen. Probably not going to happen, but it could happen. And so, of course, we get a strong move up. The buyers hold the pullback. They run off the moving average. We mark up the high, mark up that low, and now we have our new hidden channel, and we're buying off that low. All right, guys, that's a good strategy for selling off that high. Modest pullback is a failure into pullback back down, right? Deep pullback is a nested 1, 2 back down, all because of that momentum in the short term. As we go lower, what's the plan? What's the plan here as we go lower? We're bearish right now, right? So we're bearish. We would need to go against the trend on this. And that means I want that nested, don't I? Yeah, I want that nested. It's not enough to just get a failure. I want to see those bears try once. I want them to try twice. That way I can be a buyer the safe way, right? The safe way. Good example right here, right? That was a good example right there. Market ran lower. Bears tried once, higher high, tried twice, and then the market rocketed up from there, right? That's exactly what I'm talking about right there. Here's one right here. Right? Here's one right here. Strong move down, 1 try for the bears, 2 try for the bears, then it rockets up higher. Okay? And why is that pattern different? Because momentum is bearish. So if I'm trying to be a buyer in a bear market, I've got to give those sellers a couple attempts. 1, 2, let them set their own trap. Let them wrap that rope right around their neck. Okay? Let them hang themselves. Okay, I know it sounds very graphic. I apologize about that. Right, but it's true. As the market runs lower, sellers should not be selling down here. Right? But because that momentum is so strong, they're going to give it a couple attempts. This is one of the things about trading. Just because you're at a level of support doesn't mean you can just buy it. If you've got a lot of momentum going into that level of support, you've got to remember there are other people in the market, not just you, and they're going to think this market's bearish to sell into it. I recall a long time ago, one of my first trading coaches saying, Joe, it doesn't matter if you're right. You can be right all day long and lose a lot of money. Being right is worthless. Okay, I can be right about this thing turning around here, but if I don't know how to time this thing properly and respect the other side of the market, I'm going to lose money, right? The markets are littered with people who are always right, but they make no money. And that's because they refuse to see the other side of the coin. I'm glad you're right, and it's great. But to make money, you've got to be right, and you've got to be able to be, what's the word? Empathetic. Right? You've got to be empathetic to the other side. You've got to put yourself in the shoes of the other side of the market and say, you know what? If I was a seller right now, I'd probably think this is a breakout. I'd probably try a couple times. Now I can be right and make money at the same time by combining that mindset together. All right, we'll talk more about that, obviously, right? Being right and timing the entry properly. We'll continue this tomorrow morning in our trade room. But for now, though, what a great lesson here on the euro, the gold, Nasdaq, S&P, of course, and crude oil. And don't forget tomorrow morning, guys, as always, a summertime Friday. Get there early. Get out early tomorrow morning, bright and early, 8 o'clock Eastern time. Hopefully, I'll see you there with me. Don't forget, it's very easy to get registered. Right below my ugly mug tonight, there's that advanced course link on the website. If you're on the YouTube channel right now, I'll put all the links in the description of this video. If you're on our blog, obviously, I'll put the button right below the video tonight as well. Head over to the website at schooloftrade.com. Join as an advanced member. That will give you all access passes to our video course so you can learn all the steps of our 3-step strategy. You'll learn all about the entry setups. And of course, we trade the strategy together every morning in our trade room, because I'll tell you right now, the strategy we teach and use every morning is very simple. What's not so simple, though, is going out and doing it on your own. And that's why our trade room is such a big advantage for our clients. So hopefully I'll see you there tomorrow morning, bright and early at 8 o'clock Eastern time. Don't be late tomorrow, I'll tell you that much. I'd rather be early than late tomorrow on a summertime Friday. But maybe not yet membership. If membership is not quite your thing yet for tomorrow, that's okay. We have a great free trial here at School of Trade. Excuse me. That free trial, of course, includes our free trading classes where you'll learn all about our 3-step strategy. You'll also see, right, hundreds of examples of how we apply that strategy to our favorite markets. Not to mention, I'll also send you an invite to come join us on a free pass as part of that free trial as well. So definitely check out that free trial. Again, if you're on YouTube right now, all the links are in the description. If you're on the blog, check that big button below the video tonight on our blog. And if you have any questions at all, don't forget you can always call that toll-free phone number. Use that live support tool right below me here on the website. And keep in touch, because I realize that you might be alone at your computer watching this video right now, but you're never alone on your journey to becoming that confident and consistently profitable trader. As always, guys, my name is Joseph. Thank you so much for being here tonight. No newsletter tomorrow, right? Enjoy your weekend. Like I said, stay hydrated. Keep that sunblock on. I'm going to get some beach time this weekend, I think, too. I'm excited about it. But first, we got to make some money tomorrow morning in the trade room. I'll see you guys tomorrow morning, 8 o'clock Eastern time. If not, come back and see us next week. Monday evening is the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.